Every organization, from the smallest startup to the largest global conglomerate, believes its internal controls are ironclad. They invest lakhs, sometimes crores, in state-of-the-art systems. Policies are drafted by the best legal minds. Approvals are defined by strict hierarchies, and audit committees meet regularly in expensive boardrooms. Yet, despite all these layers of defense, fraud still happens. It doesn't usually announce itself with an alarm or a dramatic system crash. No, internal controls fail silently, like a slow, invisible leak in a massive dam that eventually leads to a catastrophic collapse. Today, we go behind the polished glass of the modern office to uncover the hidden organizational weaknesses that turn a trusted workplace into a crime scene. This is the anatomy of a failure. Why do the systems we trust most eventually break? Welcome to Corporate Secrets. To understand why these systems fail, we must first appreciate why they exist in the first place. Internal controls are not just bureaucratic hurdles or red tape designed to slow down the pace of business. They are the immune system of a corporation. They are built to prevent errors before they happen, detect theft while it's in progress, and protect the hard-earned assets of stakeholders and employees alike. Think of them as the guardrails on a dangerous mountain road. Most of the time, you don't even notice they are there as you drive past. But the moment the wheels slip on a patch of ice, they are the only thing standing between a minor scare and a total, tragic collapse. They are the invisible lines that separate a healthy, thriving business from a forensic crime scene. But as we will see, even the strongest guardrails have a structural breaking point. Let's look closer. Consider a mid-sized firm where everyone felt like a family. The CEO had worked with the CFO, Priya, for over a decade. He trusted her implicitly. Priya would never do that, was the common refrain whenever an auditor asked for a secondary signature. This is what we call the trust trap. Trust is the foundation of any healthy relationship. But in the cold world of corporate governance, trust without verification creates massive, dangerous blind spots. Fraudsters don't usually look like the villains you see in movies. They are often the most dedicated, long-standing, and seemingly reliable employees. When an organization stops verifying because they trust the person in the role, they are essentially handing over the keys to the vault and walking away. In the investigative world of fraud, trust is not a control. It is a significant vulnerability waiting to be exploited. Verification is the only true currency. One of the most fundamental rules of accounting and fraud prevention is the segregation of duties. The person who writes the check should never be the same person who signs it. But in many fast-growing companies or understaffed departments, one person, let's call him Rahul, finds himself wearing far too many hats. He adds the new vendor to the master file, he approves the incoming invoice, and he reconciles the bank statement at the end of the month. When power concentrates in a single hand, the risk doesn't just increase, it multiplies exponentially. Without a second pair of eyes to provide a check and balance, the temptation to bridge a personal financial gap of, say, 5 lakh rupees becomes as simple as a few mouse clicks. The system isn't technically broken. It has simply been consolidated into one person who can now bypass every filter. This is where the shadow begins to grow. But what happens when the pressure to break the rules comes from the very top of the hierarchy? Management override is perhaps the most dangerous and insidious weakness of all. A junior accountant might notice a red flag, a suspicious 2 crore payment to a shell company in an offshore entity. But a senior VP steps in and tells them, "Don't worry about it, I've already cleared it with the board. Just process it immediately." When the people who design the controls are the ones actively breaking them, the entire organizational structure becomes nothing more than a facade. This tone at the top sets the psychological stage for a total disaster. If the leadership treats the rules as optional suggestions, the rest of the organization will eventually follow suit. The biggest risk to your company doesn't lurk in the basement. It often sits in the corner office on the top floor. In the world of professional auditing, there is a golden, unbreakable rule. If it isn't documented, it didn't happen. But for a fraudster, the rule is flipped. If it isn't documented, it can be rewritten to suit the narrative. Poor documentation creates the deep shadows where fraud thrives and grows. Missing invoices, verbal-only approvals, and lost email threads are not just signs of organizational laziness. They are the deliberate gaps where lakhs and crores can vanish without a trace. When an organization lacks a clear, immutable audit trail, every transaction becomes a mystery waiting to be solved. By the time an investigator starts looking for the truth, the evidence has already been shredded, deleted, or misplaced. A control without a permanent record is not a control at all. It's just a suggestion that can be ignored at will. Without the paper trail, the truth is whatever the fraudster says it is. Even the most sophisticated automated systems in the world can fail due to simple human fatigue. Imagine a monitoring system that generates 1,000 alerts every single day. After a month of seeing 99% false positives, the person responsible for checking them starts to tune them out, clicking clear all without a second thought. This is monitoring fatigue. Controls that are not actively and critically reviewed slowly decay until they become nothing more than background noise. A red flag indicating a 50 lakh fraud looks exactly like a minor technical glitch to an exhausted, bored eye. When vigilance becomes a mind-numbing routine, the organization becomes blind to the very signals it spent millions of rupees to detect. The alarms are ringing at full volume, but no one is truly listening anymore. The system is awake, but the humans are asleep at the wheel. We often fall into the trap of believing that technology is the ultimate, foolproof solution, but automation can actually amplify mistakes at lightning speed. A misconfigured ERP system might be set to automatically approve every invoice under 10,000 rupees without any human intervention to save time. A clever fraudster like Rahul quickly realizes this and submits 100 small invoices instead of one large one. This salami slicing technique exploits the very automation meant to provide security and efficiency. If the underlying logic behind the software is flawed or outdated, the incredible speed of technology only helps the fraudster steal faster and more efficiently than ever before. We build massive digital fortresses, but sometimes we forget to check if we left the back door in the code wide open. The machine only knows what it's told, and if it's told the wrong thing, it becomes the fraudster's most powerful tool. When a company enters a phase of rapid, explosive growth, its governance and controls often grow much slower than its revenue. The focus of the entire leadership team shifts entirely to hitting aggressive targets, closing massive deals, and expanding into new, uncharted markets. In the desperate rush to scale, internal controls are often dismissed as a tomorrow problem or a cost center that slows down the momentum. But fraud doesn't wait for the compliance department to catch up. Scaling a business without scaling its controls is like putting a high-performance jet engine on a rusty bicycle. It might go incredibly fast for a short while, but eventually, the vibrations will tear the entire structure apart. Success can be the perfect, shiny camouflage for a crumbling foundation of oversight. Governance must be the constant shadow that follows growth, not a distant, forgotten memory of the past. If you don't control the growth will eventually control you. Never underestimate the raw power of the human factor. Extreme exhaustion and high pressure inevitably reduce vigilance. When employees are overworked, stressed, and under-resourced, they start taking dangerous shortcuts just to survive the workday and get home. I'll just share my login and password with Priya so she can finish the urgent report while I'm at lunch. I'll sign this approval now and check the supporting backup documents later when I have time. These small, seemingly innocent decisions are the microscopic cracks in the dam that eventually lead to a flood. A tired, distracted mind doesn't see the glaring red flag. It only sees the finish line of the task at hand. Fraudsters actively look for these moments of human weakness, these windows of fatigue where the armor of the organization is thinnest. In the world of corporate secrets, human error isn't just a mistake. It's a golden opportunity for someone else. The culture of an organization is the ultimate final control. When quarterly targets dominate every conversation and values are relegated to a poster in the hallway, the fraud triangle is completed: pressure, opportunity, and rationalization. If the corporate culture rewards results at any cost, employees will eventually find a way to pay that cost with the company's own money. They rationalize their theft by saying, "The company owes me for all the overtime," or "Everyone else is doing it, so why shouldn't I?" This is where internal controls fail most spectacularly, not in the lines of code or the policy manuals, but in the hearts and minds of the people. No system ever built can stop a person who fundamentally believes they are justified in breaking it. When the tone at the top is rotten, the fruit produced by the organization will always be bitter and toxic. A company without ethics is just a crime syndicate waiting for an opportunity. Fraud rarely appears without sending out early warning signals. There were the sudden lifestyle changes. Rahul, a mid-level manager, suddenly buying a luxury car and expensive watches he clearly couldn't afford on his salary. There were the system glitches that Priya always conveniently offered to fix herself, often staying late when no one else was around. There were the whistleblower tips sent to the HR hotline that were dismissed as unfounded office gossip. These are the red flags that everyone in the office saw, but no one had the courage to act upon. Organizations often have all the data they need, but they lack the internal process or the bravery to investigate it. Ignoring a red flag doesn't make the underlying problem go away. It just gives the fraudster more time to cover their tracks and take even more. In the investigative world, silence is the fraudster's most loyal friend. If you see something, say something before it's too late. So, how do we begin to fix these deep-seated systemic issues? Strong, effective controls are not static relics of the past. They must adapt and evolve continuously. They move from a culture of blind trust to one of constant verification. They transition from slow, manual processes to intelligent automation that works in real time. Leading organizations are now deploying AI-driven fraud detection engines to find subtle patterns and anomalies that the human eye would almost certainly miss. They are actively fostering a speak-up culture where reporting red flags is celebrated as an act of loyalty, not suppressed as a betrayal. They are rotating key duties, conducting surprise audits, and ensuring that no one is above the law. Strengthening your controls isn't about building a bigger, thicker wall. It's about building a smarter, more resilient, and more transparent organization that knows its own weaknesses and works every single day to bridge them. Prevention is a constant evolution, not a final destination. Internal controls do not fail because our software systems are weak or our policies are poorly written. They fail because our attention eventually becomes a mindless routine. The greatest enemy of a secure and ethical organization isn't a brilliant master criminal. It is our own collective complacency. When we stop asking the difficult question, why, and start assuming everything is fine, just because it looks okay on the surface, we leave the door wide open for disaster. The ultimate secret to uncovering and preventing corporate fraud isn't just buying better software, it's building better human awareness. Stay vigilant, stay curious, and always remember, the strongest and most important control in any organization is you. Thank you for watching this deep dive into the hidden world of corporate secrets. The truth is always there if you know where to look. If you want to uncover more corporate secrets, like, share, comment, and subscribe to Corporate Secrets. Join our community of investigators and stay informed on the hidden forces shaping the corporate world. Hit the bell icon to never miss a reveal. Until next time, stay vigilant.